Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and it is 5:01 in the AM Eastern Standard Time. So, the title of the video, will we see a retest of the lows of March for the S&P 500? I think that there's a very good chance that we will. Stan Druckenmiller came out yesterday at a meeting of the Joint Economic Club, and he certainly expressed his opinion that he was quite bearish on this market. Druckenmiller turns apocalyptic. Risk reward for equities is as bad as I've ever seen in my career. Stan Druckenmiller is one of those guys where when he speaks, you listen, similar to Paul Tudor Jones. And his opinion of the actions of the Federal Reserve is here, just summarized in one sentence. There's a good chance that we just cracked the credit bubble. That's the result of free money. And we've been saying that. Peter Schiff has been saying that for quite some time, that the CCP virus is just a pin that pricked a very large credit bubble. It didn't cause the credit bubble. The credit bubble caused the credit bubble. That's the Federal Reserve. So we know that with every action, every new Fed action, you get less return on that program. So it's like pushing on a string. They need to do more and more every single time they make a new action. So taking a look at the S&P 500 yesterday, bearish day, a very, very bearish day. We were down over 2% on the day. But what you need to keep an eye on, and this is what I discussed last night with members, was the price action of two other sectors. One, the airline sector, which broke down below not one support level, but two support levels so far this week. Granted, we have a couple of trading days left to go here. Good morning, Tommy. But this is bearish price action, and there's a good chance that we continue lower. The other sector that you need to keep an eye on are the banks. The banks are having a very bad time of it. It all began last week with Wells Fargo, which broke down. Then yesterday we had Wells Fargo, JP Morgan. Well, JP Morgan technically the prior day began breaking down. And you had the regional bank index, which broke down. So on the week so far, we have now, did we come close to or did we take out the week's prior lows? Low, 2130. Yeah, we took out the lows of last week on the banks. So the bank's not looking good. Tommy, the candle 4-hour reminds me of yesterday. Like they're propping it up. Oh, the 4-hour candle reminded me like yesterday, drop all-time highs. Let's take a look. Tommy's talking about if you're not viewing the live chat box, you should open it up to see what Tommy is typing or what others type, so that way you don't think I'm just talking to myself. Let's bring up the Dow Jones 4-hour candle. Where's my Dow Jones? There we go. There's a 4-hour candle. All right, so Tommy's question, I believe, is with regard to the break of the Dow Jones, possibly around right here, I'm assuming. You know, Yeah. I mean, this is one heck of a bearish candlestick yesterday. Yeah, it's a long red candlestick, Tommy. I don't disagree with you that it's a very bearish candlestick. I think it's worthy of taking a crayon out at this point and playing connect the dots. We'll just keep it simple. Here's our upper band of resistance, our lower high on the Dow Jones. What we're looking for now is a break of support. So we have a dead cat bounce here. There's no shock that we're up this morning. The question is, do we hold it? Now, Jay Powell will be speaking today at the Economic Club, oddly enough, right where Stan Druckenmiller spoke yesterday. I'm sure he'll be doing it virtually. But we'll see today whether or not Jay Powell, because remember, this was an impromptu conference for him. It was just added late on Thursday or Friday of last week to his calendar when yields went negative for November, December. So we'll see whether or not he pours cold water on negative yields. If he does, you could quite very well see a sell-off on the market. And rightly so. He should, meaning he should pour cold water on negative yields. It's not good. It's bad. So dead cat bounce here. We're looking for a break of support on the Dow. We were adding to shorts, various different shorts yesterday. Into the close. So the Dow Jones, to Tommy's point, yeah, it looks bearish. We're putting in lower highs. Dead cat bounce this morning with a threat to a break to a new lower low. Let's check out the S&P 500. And what I found interesting yesterday about the S&P 500 and the NASDAQ 100, the NASDAQ 100, I have it in front of me, so let's bring it up first. The NASDAQ 100 actually underperformed both the S&P 500 and the NASDAQ. So finally, we got the break we were looking for yesterday. So here was support, which broke. No doubt they'll try to limp this back up. They're not going to. I don't know if you ever saw the movie Reanimator, going back to the. I'm dating myself now. I took a date there to watch that movie. She was hot too. In the 1980s, the Reanimator. The thing just wouldn't die. So we are seeing a dead cat bounce. They're not going to let this thing just simply drop. This is what's keeping the market up. But we are short of it. We'll look to add more on a break, but we're going to be very, very disciplined. And it wasn't the trip Qs that we went adding to shorts of yesterday. We chose weaker sectors. The S&P 500, where are you? At the S&P 500, up slightly this morning. Again, taking our crayon out. Watching for a break off of this dead cat bounce. Pretty sloppy, but gets the job done. All right, so again, this is a 4-hour chart, so not an insignificant chart. It's not like a 15-minute chart. 4-hour chart has some meat to it. And the reason why I'm saying this is because I want to talk about price action, which led to yesterday's sell-off. And we've seen it quite a bit of late, even on the NASDAQ 100. And that's that we broke out here yesterday morning. It lured a lot of buyers in, and what happened? Bull trap. Hammered. We failed to hold the breakout. We put in a lower high, and we took out the lower band of support like a hot knife through butter on the S&P 500, leading us to a nasty sell-off yesterday afternoon. Let's check out the Russell. This time yesterday morning, what they did, we'll take a look at the chart. I mentioned that they were spiking the Russell. They were going to rotate into the Russell. Here. Nice long candlestick yesterday morning. Zero follow through. They rallied it. Never even made a new daily high on the Russell 2000. We never even made it to the opening bell with a positive tick. They just hammered it. So a good short for those that are out there. I know a couple people shorted it. This is not one I shorted, though, for disclosure purposes. So here's our lower high on the Russell. There's the break of support. Very bearish price action. Very, very bearish. And no rebound, really, this morning. So there you have it. We're looking for a break of support here. Unless, of course, Jay Powell comes out and saves the market. Now, I want to take a look at bonds and the dollar for a moment. And I want to also take a look at soybeans and whatever ag plays we have out there, because CPI came out yesterday. And as we've been talking about, we expected it. We've been watching the ag names. Food inflation is here. It's for real. Can't even deny it anymore. All right, so the dollar is catching a bid this morning. We are back above 100 again. And I want to talk about gold in a moment as well. So very tight consolidation here on the U.S. dollar. If Jay Powell pours water on negative yields, and I think he's going to have to mention negative yields. I think if he just sidesteps the conversation, that you'll probably get rallying stocks and weakness on the dollar. You'll probably see gold rip higher as well, because if he doesn't pour cold water on it, it's going to be negative yields. Let's go to gold. Gold is down slightly. The miners sold off yesterday. We closed out the NUGT gold mining trade for a couple of different reasons. One was price action. The other is that I just don't like the ETF anymore as a vehicle for a swing trade any longer than a few days. I'd rather just get long of the GDXJ, which we are currently long of. We're going to add more to it, though, when the time is right. So we've lightened up on our gold mining trade for no other reason than to really rebalance, and the fact I just didn't like the price action yesterday. So gold is holding steady here, tight consolidation. Nat gas, very bearish day yesterday. Very, very bearish day. I like UGAZ, which is the leveraged ETF, at 15. Let's bring it up. I was looking at it last night. Actually now at 1490. Here's a declining support level here in red. And so here is, they had a bull trap here. Let's widen this out. There's a little bull trap here. We were looking at this last week. It looked promising. And then slammed. And I think that we go lower here. Significantly lower. So at current 1490 and declining, might we pop? Maybe, because we have RSI a little bit oversold. But tomorrow is Nat Gas inventories report, so be careful. 10:30 a.m. Eastern Standard Time. And bonds. The 10-year bond price looking healthy this morning. I want to take a quick look at the 10-year yield on a weekly basis, because we had broken out earlier in the week. Here's a weekly chart. You could see that bond yields have broken out significantly. We're off the highs of the week, but yields are on the march here. So I can't wait till this updates this evening after we get Jay Powell's comments on the books. And we'll see what happens with the 10-year. Do we regain momentum and see yields rise, or do we fade? And I also want to take a look at the yield curve. This is a monthly chart, and we continue to steepen here. We may have come slightly off the highs of the month. Let's clean this up. This is a weekly view. Wow, look at this. Look at your Stokes. High or low on Stokes. We're down so far in the week. We have pulled back on the yield curve. And the reason why this matters is that when you get the yield curve steepening, it's traditionally not good for stocks. As you saw back here, when we first began to steepen in February, here's the steepening of the yield curve. What happened? I'm not saying that this is the proximate cause of the sell-off. Obviously, it was the pandemic. But the yield curve was steepening at the time. And the S&P 500 overlaid here in blue line chart came in dramatically. And now we are steepening yet again. Going back to the pre-market activity, let's take a look at some ag plays here. Corn strong and breaking out. Look at this. 4-hour chart. We broke out here. Breakout point failure. Was able to struggle back. What are we doing? We're retesting what was resistance. Back here, back here, back here, back here, all the way back here is now support. Here, here, here. So corn, while down on the session, is looking very, very good. Soybeans have already broken out. Here's the retest. Once, twice, rally, new higher highs, higher lows. Ag looking good. Where's wheat? Wheat is still weak. Still weak here, and certainly not a buy. I wouldn't touch wheat. But soybeans, corn looking very good here. Protein, hogs looking good. No breakout yet. Feeder cattle. They've had a nice run. They're coming in a bit. Home heating oil. Lethargic, nothing happening there. Let's check out West Texas Intermediate Crude. There we go. Light sweet. Looking good. Here is an inverted head and shoulders setup. Left shoulder, head with a double bottom, a W formation. Right shoulder. What we're looking for, let's see if this works. Nah, I don't like that. Technically it did work, but I want to use a higher level of breakout here as a neckline. And there we go. If we see a breakout on light sweet crude above 2666, you're going to see a continuation move higher here. It's going to be a nice breakout, nice base building here. Let's take a look at some stock chart requests. Yesterday, I spent some time going over Microsoft, and I was asked to revisit it. Am I still bearish on it? Yes and no. You know, the logic here with Microsoft is that on a short-term basis, it's still a bullish chart. That's beginning to change somewhat, given the fact that at current we are now down on the week, and we are possibly putting in a lower high. I think that once we break 175, which marks a major support level on Microsoft, it becomes a short in earnest. Now, you could short it, but you need to be able to use a stop. If you're good at setting stops and you're going to behave and you're going to set your stop above the week's highs, if we close above this breakout point, then you could short it. And the only reason why, I would stay very small. Stay very, very small. Keep that loss small and add on a breakdown below this lower band of support. Why am I bearish longer term on Microsoft? It's not the daily chart, which is what you're looking at right now. Yes, it's a very bearish chart, but it's not my primary reason for being bearish on Microsoft. One, I think that there's a threat that layoffs are going to extend into the white collar. So far, by and large, you've seen services, hospitality, restaurant workers severely impacted, disproportionately impacted by layoffs. If that extends into white collar America, which it probably will, do we need as many Microsoft subscriptions in corporate America? Is Microsoft truly impervious to layoffs that we've seen so far? I think not. I think that they've been attractive because of their balance sheet, but they're not historically cheap by any stretch of the imagination. Hey, Danny. And the real reason why that we're looking for a big sell-off here in Microsoft is when you take a look at, you can first go to a monthly chart, RSI at 80, and you may be saying, you know what, Bob, you can go a lot higher on RSI. Yeah, that's absolutely right. The problem is we've been higher already. We're trending down on RSI, right? We peaked out in September of 18, lower high on RSI in January of 18 at 84.88. Now, it appears as though we're peaking out yet again at around 82.56 on a monthly high. You want more? Take a look at a quarterly chart. Quarterly chart, RSI 90.46. Think about that. The last time we were up here, look at the sell-off that we got. We were knocked down by, what, 66%? I'm not saying that's going to happen. That goes back to the dot-com era. Yearly chart. Microsoft. Yearly RSI, 92.33, leaning into the third standard deviation Bollinger Band. So we're overbought. Very, 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 very overbought. And the stock is not cheap. If you believe that next quarter's earnings are going to be blowout and then the PE multiple, they're going to grow into it, fine, stay long. I don't think they're going to. Too many headwinds out there and too much complacency in this market. Danny, I went over, I think you're referencing Nat Gas. Is that accurate? I went over that earlier. So you may want to just check that out on the replay. I think we're going lower on Nat Gas. We had a big break. As a matter of fact, let's bring up, I went over the chart last night on Market Wrap. Is this the chart? Let me make sure I'm using the right chart. This is the chart. Big, big break yesterday on Nat Gas. All right, so this is a classic continuation breakdown. We had some promise last week, the week prior, we broke out. That breakout was rejected, and we have now broken down below the lower band of support. It appears as though we are going lower on Nat Gas. Now, one chart I went over yesterday that did very, very well, and we're looking to, and by the way, Danny, you can see I have an alert set here, UGAZ. On Nat Gas, we have a buy entry point that we're entertaining at current, so we may be getting long of it, but just not now. I think we're going lower. Where is OPCO? Oh, it fired off. So we had an alert fire off yesterday on OpCo. We may need to reset this because we backed off the highs. I'm not sure if we closed above resistance. Oh, I see. North American tanker. Gotcha. We'll take a look at it. Hi, Kara. Hi. Bob, have you considered shorting European indices instead of U.S.? People are talking about manipulation in the U.S., but I think the Europeans aren't organized enough to manipulate the markets. That's very good. Uh, I haven't yet. The minute I hear about the Federal Reserve going in and buying up equity ETFs, then we're going to have to exit the short side. I mean, you could argue, yes, you're right. They're propping up the stock market vis-a-vis corporate bonds. So have I entertained it? Not yet, but there may come a time where we need to. So it's a valid point. All right, so OpCo Health, this is an outstanding sector. And it broke out yesterday, and it held the breakout. You can see we were a lot higher. We're looking for a retest of the support level. This is a daily chart, and then we may look to open a position here. If it fails to hold, we're going to stay away. ResMed, no trigger. MAG rejected yesterday. This is a silver miner. It pulled back and retested support. We're going to keep an eye on this one. Create an alert. And of course, if we have the Federal Reserve that comes out and pours water on negative yields, then we will probably avoid. And we'll keep it active for a while. And we're good to go. Okay. Zoom. Bad day yesterday. All right, so the recent technology leaders are even losing steam. Possible lower high here on Zoom. I think Logitech reported earnings yesterday. I really like that setup over the weekend. LOGI. I didn't check their price action. Very nice. It was a beautiful chart going into earnings. All right, let's let this settle down. I'm not going to chase the shares. But Logitech looked really, really good. And they should certainly benefit from the work at home revolution here. And we'll leave off with Nat for Danny. Okay. All right. So big month last month. This month, no follow through, and we're trading back down below the 200 period moving average. The month is still young, so nothing really to trade off of at current. What I'd be watching for is a close down below 5.21. If we close down below that level on a monthly basis, then there's no trade to be had here to the long side anyway. And I don't know whether or not I'd short it. But we are down below support. It marked the highs of December and January. We broke through last month. This month, we're doing a retest, and that's what we'll call for now. So we became overbought on a weekly basis. We've pulled back, no great shock. We closed down below support last week. This week, no new weekly high, no new weekly low. It's simply a watch. And we have at current broken trend. Now, if we reverse to close back above support again at the 5.20 mark, then all is right with the world. Then you can look to get long of Nordic American. But at current, beware because the bears are in charge. Daily chart. So, in keeping with the weekly chart, we're breaking down below support levels, consistent here. Are we seeing early signs of recovery through to the 11th? Yes, but yesterday a bearish reversal bar on the day, implying that we may go down here to where is it? About 460 per share. Where do we close? 489. So if you're speculating that the shares longer term will move up higher, then you want to set your alert up for that price point. And it's a rising, it's a rising target, that support level. So it's best just to set an alert, let the computer do the work for you. Forgive my grammar errors there. And we're good to go. So if we come down, you can see how this is rising. So that's why it's best just to set an alert and not just stare at it all day. If we come down to at current $4.61 per share, then that would make for a good risk-reward entry point if you're speculating, because if we break down below that mark, you're going to want to stop out because we could quite very well retrace all the way down to a 3 handle. So that's my take on Nordic American. Folks, if you haven't already hit that like button, if I could ask you to do so, it really helps me out with the YouTube algorithm. And please subscribe to the channel. Everybody have a profitable trading day. Members, I'll talk to you tonight on Market Wrap. Everybody be safe, and I'll talk to you soon.